Let's have another look at Aritzia blasting to a new record high. Investors love the surge in profits in the second quarter. U.S. growth exciting the market. Our guest has a buy on the stock, sees value here. We're joined by Grant White, portfolio manager and investment advisor at Endeavour Wealth Management. Grant, great to see you. Update us on Aritzia. Would you be a buyer still today with the shares above $90?
Yeah, this is a great story going on right now, Andy, and great to see you as well, by the way. But Aritzia, I mean, obviously a really great report here. We're seeing lots of really strong growth year over year with this company. But yeah, we still have this as a buy. Now, the large reason for that is that we still expect that they've got a lot of growth opportunity, and particularly in the United States, where they've shown that they can execute very well, and we believe that that's going to continue on. And so yeah, I mean, I still have this listed as a buy, and I think that we're banking on here is that they can continue to execute on a really great strategy that's been working for them, and there's more room to grow.
What same store sales up more than 20%. It's fickle. It's like show business. Your clothes can miss the mark, but it looks like they've got stuff women want to buy right now.
Well, yeah, I mean, I think one thing they're capitalizing on is it's a great product that's, obviously women in particular are loving. But the other side of it from the business side is we love the way that the balance sheet is looking right now as well. The company is in a really good spot. Cash flows are strong. Sales increases are strong. Same store sales are strong. So from a fundamentals perspective, the company is in a really good spot. And I think that's really important right now because, we don't know what volatility is going to look like over the next little while, but I can expect that I think that there will be more volatility. And I think the quality of balance sheets is really important right now. And so when you've got an opportunity for a company like Aritzia, where balance sheet's strong and the fundamentals are strong, but they also have this great growth opportunity in front of it that we believe that they can continue to execute on, and management has shown that they can, then you've got a good opportunity where you can still buy into a company. Even though we've seen great increases on this one, we still think that there's more room to grow. And I think that there's at least 15 to 25% still left in this one over the next maybe 12 months or so, depending what markets do, obviously. But I wouldn't be surprised to see this give another 15 to 25% over the next 12 months.
The markets, broadly, you see upside before the end of the year. Often a good time in the markets. Well, November and December in particular. You see possibility of another 3 to 5% in gains.
Yeah, I mean, this is a bit of a guess because I think that the markets there's tailwinds here that look strong that can help to lift higher. I mean, so 3 to 5% is kind of like I think a base case in my world, and it's because if we continue to see interest rate cuts that are at least in line with expectations, and maybe if we get a surprise one, then I think things can go even higher than that. But if we can get interest rate cuts in line with expectations, then I think this market has some tailwinds that are feeding it. There's a lot of really good stories going on right now. Companies are generally, I think, are doing quite well. Now there is still the undertone of concern, and I think that if you ask people on the street, most people are feeling not as great as what the markets would tell you things are doing. And so I think that there's still some room there. But in saying that, I mean, I think you have to look beyond the well-known names, and I think that there's maybe some surprises outside of the AI story that investors might want to look at, with the focus on fundamentals again, because I can easily see a pullback early in the new year as people look to take profits off the table. But I think we're going to want to see a nice number to end out the year. So.
Give us your take on Apple. Google has been mocking them for supposedly being behind on artificial intelligence. That has weighed on the stock. Let's put up a 5-year chart. You see opportunities, sir.
Yeah, I mean, I love those ads, by the way. Vanilla Pro, yeah, I'm a big fan. I think the ads are really strong that Google has run. But in saying that, I think that Apple is the sleeping dragon that's not going to go away. And like the ecosystem is so strong with services and devices. I mean, frankly, I was at the iPhone 17 launch by accident. Frankly, I was at an Apple store that day, and they still have the velvet ropes out. There's still lineups outside the stores. Not what it was back in 2011, 2012, but this is still a thing, And so Apple has this really strong ecosystem. Now, what they've done more recently, I think, is really encouraging on the AI front. First of all, they've set up their devices to be very strong in the AI space. So, they've got higher compute power. They've got set up for, they've opened up so third-party developers can get in there and make sure that the experience with AI is going to be better. They've done some really interesting changes that other companies maybe haven't done. And so they've kind of taken a bit of a pivot, which I think is going to allow them. I wouldn't call this a catch-up. I would actually call this is a differentiating move that Apple is doing here, and I think that over the next 12 months we're going to see execution on that strategy. So, I know that Google and Android devices are looking really strong, and frankly, we're an owner of that company as well. But I wouldn't count Apple out yet. I think it's been a bit of a sleepy dragon here, and I think they're waking up. And I think they're going to have a very strong. So again, with a company the size of Apple, this is not like we're not doubling in the next 12 months or 2 years. What we're looking at is I think a base case of a 15 to 20% return over the next 12 months. And if they really nail it, maybe a little bit higher, looking at 25 to 30%, just given where the pricing is today and where it could be. So
yeah, I mean, the stock, it is up this year. It's up only 2%. So it's lagged some of the other big tech players. What about Starbucks? Are you interested there? They are closing restaurants. But of course, they do that. They just get rid of outlets that aren't profitable enough.
Yeah, I think this is a really interesting story because while the whole world is focusing on chips and models right now and AI, and I think that there's another leg up that it hasn't quite caught on yet, which is the experience makers in the world and the companies that are going to be using all of these fantastic new tools that are being developed by like the Googles of the world, and how they're going to create human experiences around it. And so a company like Starbucks, we actually have it as like a hold but a speculative buy right now, just given on potential. I love that they're going back to their roots. I love that they're focusing back on the things that made Starbucks special. And they've done this a couple times now. And we see this obviously in brands time after time. Disney's done it as well, where they've kind of gotten away from the things that have made them special, and then they have to go back to the basics. Starbucks is going back to basics again. And I think that's a really good move. And I think right now, the tailwind behind what they're doing is going to be even stronger, just given that I think people are going to be craving a little bit more of that human to human experience, given that the world that we're in with AI. So I love this. I love the direction they're going in right now. I mean, I think that, again, I'd call it a bit of a speculative buy because there's still a long way to go in the execution of that strategy. And they're not the only ones, but overall as a theme, where we're looking at is the experience makers that are going to use AI to make the human experience a whole lot better going forward. And I think that's ultimately going to be the real winners. I mean, you look at the internet revolution back in the early 2000s, and it's not like we're talking about the internet makers now. We're talking about the Amazons and the Alphabets of the world. And I think that the experience makers are going to be in the same boat as it relates to AI going forward.
You have a stock idea for us called Bread Financial Holdings, and it's yet another of the players in the fintech arena. They offer cards, they offer loans. Tell us what attracts you here.
Well, I think it's a bit of a different ballpark altogether, because like this is just a really interesting company that is, essentially what they do is they make buying things easier, and they work with some really strong brands, like Saks and Saks Off Fifth, and Crypto.com is kind of a more interesting one now, where they've created a partnership there where if you're using the credit card tied to crypto, you're getting crypto benefits and so on. So essentially what this company does is, if you're looking at those, you're buying something and they create special terms around it, you pay over the next 4 months or something like that. That's what Bread does. Where I like this is, especially if we continue to see maybe wallets tightening a little bit over the next little while, or if it continues on like it has over the last year, companies like this can do very, very well because there's still going to be consumption, but you might want to consume at a slightly better terms for you. So I think that there's a really good tailwind behind this company from a cyclical perspective, but they're also getting really good uptick with some great brands, like I mentioned, like Saks and crypto and more. So I think that there's going to be that much more partnerships going forward. So this company's story is really just getting going. And from a pricing perspective, it's trading really well. I think there's a good value opportunity here. So all things are really lining up. I mean, the balance sheet's strong, the growth is strong. Pricing is in a good space right now. And I think that there's good tailwinds on the growth story here from a cyclical nature. And so I think as an investor, out of all the companies I've talked about today, probably the best value opportunity is Bread Financial. And it's definitely worth taking a look at for opportunities. Again, if you get away from the top names that have driven the market over the last year or two, if you find names like Bread Financial, there's a lot of room still to grow here. And, I wouldn't be surprised to see, again, 25 to 30% over the next 12 months, assuming the markets hold out and don't fall out from underneath us.
Grant, thank you very much indeed.
Yeah, my pleasure, Andy. Thanks so much.
Grant White, portfolio manager and investment advisor at Endeavour Wealth Management.